Imagine turning a $1,000 investment into $10,000 just by betting on the right company. Now, what if I told you there's a stock in the health and wellness space that some investors think could do just that? Today, we're breaking down Hims and Hers Health, a high-end stock. Is it a hidden gem or just hype? All right, so first, what even is Hims and Hers Health? If you've been on YouTube, Instagram, or TikTok, you've probably seen their ads. They sell health and wellness products directly to consumers, things like hair loss treatments, skin care, mental health meds, and even sexual health products. Basically, they're cutting out the middleman, making it easier and sometimes cheaper for people to get medications and personal care products without awkward doctor visits. They're targeting millennials and Gen Z, people who want convenience and privacy when it comes to healthcare. But beyond just selling products, they're tapping into a growing trend, people taking control of their health from the comfort of their own homes. With rising healthcare costs and long wait times for doctor visits, a company like Hims that offers direct-to-consumer solutions could be filling a big gap in the market. Now, let's talk numbers, because a great business idea doesn't always mean a great investment. Hims went public in 2021 through a SPAC, which, let's be real, was a risky move given how SPACs performed post-pandemic. But despite the market's ups and downs, the company has been growing fast. Revenue has been climbing year over year, and they're attracting millions of customers. Their subscription-based model is a key part of their success. Once customers sign up, they tend to stick around, bringing in predictable recurring revenue. The big question, are they making money? Not yet. Like many high-growth companies, they're reinvesting earnings into marketing and expansion, but their losses are shrinking, and analysts think profitability isn't too far off. And let's not forget, companies like Amazon and Tesla took years before turning a profit. Growth comes first, profits come later. So, is this a red flag or a buying opportunity? That depends on how you look at it. Let's break it down further. Here's why some investors are bullish on Hims. Massive market opportunity. The telehealth industry is expected to keep growing as more people get comfortable with online healthcare. Brand loyalty. Hims has a strong brand and a subscription-based model, meaning customers keep coming back month after month. Growth potential, they keep expanding their product line. Mental health, weight loss, even dermatology. More products means more customers. Digital-first approach. Unlike traditional healthcare companies, Hims operates fully online, which lowers costs and allows for rapid expansion. If they keep scaling, cut down losses, and reach profitability, early investors could see big returns. The potential for Hims to dominate the direct-to-consumer healthcare space is real, and some believe they could become a household name. But hold up, there are risks too. Competition. Big players like Amazon and traditional pharmacies are moving into telehealth. Can Hims survive against giants? Profitability. Concerns. If they keep spending aggressively on marketing, they might struggle to turn a profit. Regulatory risks. The telehealth industry is evolving, and new regulations could make it harder for Hims to operate the way they do now. Customer retention. Subscription models work well, but if customers find cheaper or better alternatives, they could cancel, impacting revenue. If any of these factors slow them down, the stock could take a hit. Investors have to decide if they believe in the company's long-term vision. So, is HIMS stock a buy? Well, that depends on your risk tolerance. If you believe in telehealth, like high-growth stocks, and can handle volatility, it might be worth a closer look. But if you prefer safer bets or want a stock that's already profitable, you might want to pass. Now, I want to hear from you. Do you think Hims stock is a smart investment, or is it too risky? Drop a comment below and let's discuss. And if you got value from this video, hit that like button and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one.